GMAB AS develops antibody therapeutics for the treatment of cancer and other diseases, primarily in Denmark. Okay. So these guys are a healthcare biotech company. And I think on Monday's live stream, as well as other videos, I've talked about how small cap biotech and high growth pharma companies have been doing really well. Catalyst Pharma is one of the stocks that I own, and United Therapeutics is another stock that I own. When I ran a stock screener on Saturday in the community investor workshop, it revealed that the stocks that had the best fundamentals were in biotech and high growth pharma. And one of the other community members recommended symbol LNTH, which is right in this particular industry. So out of the gate, good industry. And I'll tell you why. As we go look at this company, the market cap is 12.76 billion. It sounds that, I'm in the US, so this would be an investment in Europe. That's a positive. I don't have a lot of investments in Europe, and there's a lot of good companies out there. So 12.76 billion in revenue. Market cap, 12.76 billion in market cap. Revenue is almost 3 billion. The PE ratio is really good at 18.15, 22.67 in the next year. Analysts think it's really discounted, 105% discount. Over the past year, it's down 32%. Okay, it's down 32%. Analysts like it. Growing. Company is growing. They had a bad year here in 2021. I'd be curious to find out what happened. Did COVID restrictions shut them down? What was the deal? Also, understanding what their fiscal year is important. Sometimes companies have these weird fiscal years where the year ends like in the middle of the year, at the beginning of the year, at the end of the year calendar, and it kind of throws off our analysis because the months, right? So for now, I'm going to continue on. It looks like they grew really fast and they continue to grow. I like looking at the quarterly just to make sure the last quarter also looked good. And the Q3 looked good, 17.5. Okay, looks good. Now let's take a look at their margins and their free cash flow. So, holy smokes, 96% gross margins. Wow, that's incredible. And they were at 100%, meaning that they didn't have manufacturing capabilities. They weren't producing products. They were probably just licensing a patent that they achieved. They were able to go through the whole clinical trials, development of a drug, and they were able to get a drug commercially viable. And then other companies, bigger pharma companies, were able to pay them a license fee and then go make that drug. So that's what made them super profitable. Not bad at all, man. It's like printing money. I think it costs more money to print money. So these guys are doing great. Free cash flow looks stupendous. So, and am I looking at the right currency here? Okay, DKK. So this is a DKK currency that is so we got 0.14 to 1 USD. Okay, so when we look at their market cap, this is in US dollars. Okay. But when we look at their financials, understandably, since they are in Denmark, we're going to look at the Danish currency. And their free cash flow using Danish currency for the trailing 12 months is 6.5 billion. So 6.5 billion. And what I'll do is just do a quick calculation. So it's about $920 million of free cash flow in the trailing 12 months. It's very good. They're growing at a really nice rate. It's been a little inconsistent, but maybe now the ups and downs are a little more understandable to me, meaning that maybe some of their partners, like a big pharmaceutical company, produced enough to put into inventory, and then they're like, hey, we're not going to produce anymore, because in manufacturing, you want to have efficiency and you want to turn on the factory, produce, and then turn it off. You don't want to run your factory at less than 100% of its capacity to achieve good efficiencies in the factory. So that kind of makes sense in my mind why they've had some of these ups and downs. So the cash flow looks good. It's 920 million. It's growing nicely. So this stock looks good. You're producing, if you multiply it based on their growth rate, right? You have a nice growth rate. Multiply that free cash flow times 20, you get up to 18.5 billion in market cap value. And that's being a little conservative because this is a good growth company. And maybe they get acquired by one of these pharmaceutical companies. It's like, man, these guys have really good drug patents that could be, acquired, and then we don't have to pay it, and then we can license it to other companies and so forth. So this is a really attractive stock. Now, what's been interesting is the healthcare space has just been getting hammered, but some of these stocks still do really, really well. And this one here first, I think it's really good. Let's take a look at their balance sheet just to make sure these guys have a good balance sheet. They have good EBITDA at 1 billion. And what currency are we dealing with? So this is, I think it's USD. Okay, very good. So 1 billion. And they have very little debt, 147 million, but they have $2.6 billion of cash. Yeah, this is a good stock. This is a good company. The space in healthcare, as I look at, general areas of opportunity, healthcare is at the top. I think we're going to get into CVS and Humana and United Healthcare, Elevance, probably after I get done answering questions. But this is a space that's going to come back. Healthcare, these drugs, right? If you're unfortunately a person that needs this particular treatment, you're going to pay. You're going to take your savings and pay for those drugs. This company deserves that money because they took the risk of putting the investment into the science. The science could have not worked out, and the company lost all their money. So when they do achieve that, hey, they have a drug that really works, they deserve to be compensated in the form of profits. That way, the next company says, hey, let's go invest and try to find cures to diseases to help people. Because if it works, then we will be rewarded. If you don't have that reward system, the drug discovery model breaks down, and then nobody takes a chance. Next thing you know, people are dying from diseases because the drug companies don't want to take chances. So that's my feeling on it. I know it could be a pretty emotional football that some people would view it. But that's how I see it. I worked at a pharmaceutical company. I understand the investment that goes into making a new drug. I participated in that whole process of starting with a new idea and going through all the hoops that the FDA in the US, and there's an equivalent government entity in Europe that forces you to make sure that drug is going to be safe, make sure that drug is going to work for people. You're just not giving them, sugar water and telling them it's going to help them. So all those things, when you add up the amount of investment and risk that a company has to invest, it's humongous. So my feeling is we need to continue the reward system to continue the advancement in healthcare. And I'm a believer in that. So good one. You learn something new every day. And I am a little bit overloaded on biotech companies right now. Not a bad place to be. This would be a really good idea for an investment for me. But I also need to, keep an eye on how many stocks am I going to buy in healthcare. So I have a couple good ones. Catalyst Pharma is doing great. I'm up 48% on that stock. United Therapeutics is doing great, up 25%. Pfizer is beginning to pick itself up. I really am bullish on Pfizer. I'm buying more into Pfizer. I'm buying more into United Therapeutics. So the reason why I say that is I think this is a really neat idea, but I need to watch that I don't buy too many companies too fast. I am going to put these guys on my watch list and keep an eye on them. I do like that they're in Europe and I'm in the US. Not bad to be diversified around the world. So thanks for bringing this one up. I appreciate it.